In this video, I'm going to show you step by step on how you can mark up your charts and so that you can trade on you see all the markets for forex trading, right? So this is the step-by-step video on how you can mark up your charts every single move so that you don't miss every single move. So I'm going to start with the daily. As you can see here, I'm on our daily. So actually I'm using the trading view. I'm on a Euro USD, right? So this is, you can change your symbol over here and you can type whatever you want, the one that you want to trade, and then you just go, then you find your preferred broker. So these are the brokers that are here. So I have just chosen Pepperstone because I also trade on Pepperstone. So everything or every data that you see here is from Pepperstone, right? So with this data from Pepperstone, you're going to see the charts. So I've loaded the charts from 2024 here, and as you can see, everything is here, right? Is now from 2024 January to up to November. So this is the daily. So this is a daily interval. So each and every bar. So maybe you can go backwards to tell you what these are. So first of all, these are candlesticks, and each and every candlestick. So that means if you select the daily here, so you can select whatever you want over here, or you can just come on top here and select for 12 months, daily, 4 hours, 1 hour. You can even go 30 minutes. You can just do everything here. So I've just marked mine. So if I want 30 minutes, I just add to favorite, then it appears on actually 30 seconds, it just appears on top here, right? So if it's 30 minutes, it appears on top here. So for this daily chart is for the Pepperstone for this market structure, right? So each and every candlestick here represent a day. So this candlestick here will represent a day, everything here represent a day, right? So that's why you see for 2024 we have just this candlestick here. So when we reach December, you'll find that the candlestick within that December will be 365, or whatever reason, maybe 366. But that's what I'm telling you. So each and every single candle here represents a day. So if we go to 12 months, then that means one candlestick here, like this one, represents 2024, right? Because I have selected 12 months. So one candlestick here represents 12 months, then other candlesticks also represent 12 months each. So each and every candlestick represents 1 year, right? So if you go back, so I'm on a paid tool. This is on a paid, I'm actually on a paid trading view. So I have a link in the description. If you want it, you can check it out. You get a 30 days free trial, so you can cancel or you can go on with it payment. But this one gives you the data up to this month. For this one, you can even replay, right? So maybe something you want to replay, you just come here, you select a date, and then you can replay everything there. So that's why we have a replay, your bar replay. Okay, so as I was telling you, now when we go to daily, so each and every single candlestick now will be representing, now represent a day. So I want to show you how you can mark up your market structure so that you can, if you want to start trading, then you can do it. So this is 2023. So what I wanted, it was 2024, maybe from here 2024, and show you what is happening here, right? So this is on a daily chart. So as you can see, from 2024, this is the candlestick for the 2024, which represent a day. That was January 2nd, and then the other one was January 3rd, January 4th, and so forth and so forth. So for you to mark this, then There are three things that you should bear up in mind, right? So with the market structure, there are like up, let me show you, up and down. So we see that we have like from 2024 we see up, right? And then there is down from here to here, right? So then from up, down, right? So everything up and down, as you can see, up and down, up and down. So these are the market structure. So that means, so we have like strong points, like we have this is the height and this is the bottom, the high, the bottom, the high, the low, the high, the low, the high, the low, the high, the low. So for let me just delete this and you show you something. So for this height, this is a break structure, right? It has broken this structure over here, right? So this height has broken this low. So that means this is a strong high, right? So for this high to break this low, then it makes another low, as you can see down here, right? So this low does not break up this high. So that means this is a weak low, but this is a strong high. This is a strong high because it has broken the low, this low here, right? So this low does not break this high because when it went from here to maybe here, so this would be a strong low. I mean a strong high if it would have taken this height here. Okay, so if it could have led to this break of structure over here, then this will be a strong high. But because it has not taken this high here, so that means it is a weak low because it has not taken this high. So this is a strong high, this is a weak low. A strong high because it has broken this low here, right? As you can see, there is another break of structure. This is a daily break of structure, right? So the strong has taken this low, then this low has not taken this high. That means this is a weak low. And this low, I mean this high, has also taken this low, right? So the high that we are working with here is this one here. Unless this high is taken, then we'll know that there is a market, the change of the market sentiment. So this is a strong high. This is a weak low because it has not taken this high, right? This high. Then definitely it takes up this high. So this one becomes our strong low, right? Okay, because this is a one move from like from here, a path. So this is a one move from here to here, then to here, right? Then to here, right? So these or it may go down, or okay. So this high here has not taken this low here, did not take this high. So this is the lowest low that took this high here. So this is the overall lowest low that took up this high here. So as you can see, we could have not said this, we could have not written like this. Let me show you something. We can't say this, then this, because this low does not take up this high. So it is still a weak low, right? Because it has not taken this high. And this high does not take up this low, right? So it is not a strong high, right? Let me repeat, maybe you didn't get that right. So we can't consider this low to be a strong low because it has not taken this high, right? If it could have taken this high, this one will be a strong low, but it has not taken this high, so that means it is a weak low, right? And this high has not taken this high, as this one has taken this low, right, through this break of structure. If this high could have taken this low to be like this, and this, and then go this and this, then that means this will be a strong high, right? But it is not a strong high because it has not taken this low. So what happens here is this is the only low, okay, that takes up this high through this move, right? So that means we only take this is the lowest low that made this high to be taken out, right? So this is our lowest low. So this one was a break of structure, but this one is now a change of character. This one now will be a change of character. Let me just label that one. That one will be a change of character because then this one is a break of structure. This is a break of structure. So this was a break of structure because it was like a continuation of the movement of the market. But this is a change of character because it now has changed the market sentiment from downtrend to uptrend, right? So when we're marking up our charts, then we kind of identify the lows and the highs, so we can know that from this move we are going down, and then maybe it goes to some certain supply and demand, or a certain point of interest down here, and then continue ways up. As you can see with this, let me just go back to 2023. So with 2023, there was a downtrend. As you can see, there was a downtrend, up and down, up and down. This is a strong high that took this low, okay, a strong high that took this low, a strong high that took this low, right? And then this is a strong low that took up, because this one was a one move. So let's just say tentatively it was like this, then it went up, then it went down, and then we use this to get up this. So this now becomes a strong low because now we have seen a change of the market sentiment. So just the same as here, for this, now we see a change of market sentiment, that it was a downtrend, then it has now changed to an uptrend. So there was a break of structure as down. So this is how the market structure moves. So this is a strong high that takes up this low, okay, a strong high that takes up this low, a strong high that takes up this low, right? So when it reaches here, this low can have something of the sort, okay, and then takes up this high, right? And the market changes. So we see that this become a break of structure, okay, this one becomes a break of structure, and this one also becomes a break of structure here, and this one becomes also a break of structure, okay. But now there is a change of market sentiment from downwards to an downtrend to an uptrend. So this one now becomes a change of character, right? So it has taken this high, so this one now becomes our strongest low, the strongest low. So if it has taken this high here, then this one becomes our weak high, right? Because this is now a weak high because it has not taken up this low. If this thing could have been this way, then this one will be a strong high, this will be a strong high, a strong low because it has taken this high, and then this one will be a strong high because it has taken this low. But since it has not taken this low, then it is a weak high. Then this one now becomes a strong low So with the downtrend, we see that we have strong highs because it takes up the weakest low. But with a strong high, a strong low, it takes up the weak high. That's why we see that there is a break of structure, right? There is kind of a break of structure here. Sorry, we kind of have a break of structure here, right? So that's why in this thing here, what I'm showing you here, we see that there is a change of character. So for 2023, we saw that there was an uptrend, and 2022 was a downtrend. With 2023 was an uptrend, and then you see this one highs were taken. This high was not taken, so that means there was a change of market sentiment, right? Because it went down, right? But since this high has not been taken from July 2023, so that means we still have a strong high that has not been taken out from July 2023, right? Okay, so the market was just ranging between this, but if you look at it on a 2024, then you'll find that the market was changing from April 24th, right? I mean, from April 16th, then we saw that this now was the lowest low in 2024. So this is the lowest low, and then it took up this high. So this is how we read the market sentiment, right? So when you want to trade, you have to know where the market is going to, and how you can know, or we don't predict really, but we see where the market will go next. So this is for a single day. So so we'll see what is happening with so how you can do your trade. So you start with the market structure, then you go to 4 hours. You go to 4 hours and see what is happening between, and then we'll start doing that market structure, or we shall see that market structure before I start showing you how I normally trade this Forex index and the Forex. So without further ado, I'll see you in the next video.